All right, good evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. So, we talk about markets in detail. So, first, we talk about the market performance this week, then what we are anticipating in the key indices, both Nifty and this, Bank Nifty for the next week, and some of these stocks ideas also, which looks upbeat to us. Some of these names which are slightly in the back foot. So before we begin the session, a quick disclaimer that the idea behind this webinar is to share our insight in markets. It's not a trading or investment recommendation. So before making any decision based on the input shared, please check with your financial advisor. Now talking about the indices first, both Sensex and Nifty ended with a cut of over a percent. So in continuation to the last week's final sessions decline, we saw that the profit taking extended in markets. Both Sensex and Nifty drifted lower. More importantly, we have tested the 20 days of exponential moving average, which act as the first line of defense in case of correction. So Nifty tested the same and finally settled around 18,500 levels, and for the Sensex it was close to around 62,200. So what to anticipate next, that we will talk in details in the following slide. But before that, sectors wherein we saw profit taking, or where we had the outperformance. So FMCG and the banking were the saviors, I would say, because if you see that majority part of the week the tone was negative, but it was like we were holding. So initially it was close to around 18,500 600 zone that Nifty has been holding throughout the week. Today we have slipped below the same due to the pressure in the IT pack. So FMCG and the banking, played a critical role in capping the damage throughout the week. At the same time, you see this, list of losers. So IT tops the list, followed by realty, energy, pharma, and media. So today, in fact, the decline, cascaded in the IT pack. Earlier, it was a gradual decline that we were seeing in the IT majors and the mid-cap IT names, but today it intensified, and which led this tally wherein the IT is topping the losers list, followed by realty, energy, pharma, and media. So similarly, if you see that the gainers and losers list also, so all 5 names on the losers list are from the IT pack. So LTI, HCL Technologies, Intellect, Persistent, Coforge, all 5 names from the IT pack. At the same time, from the gainer side, PSU banks were witnessing traction, and Bank of Baroda was the top gainer from that list, gained over 10%. Then we had Siemens, Cummins, Ramco, and Coromandel, which contributed as a weekly gainer. So it was a kind of like a clear week wherein the pressure in the IT pack, spoiled the mood for the market. Now, what to anticipate for the next week? So this is the weekly graph of our Nifty index. So you can see this, last week's candle. This upper part shows, a bit of profit taking in the final session, and then the continuation of the same, that we have lost nearly 1% this week. So indications are in the favor that yes, we have tested the first line of defense, that is the 20 days of exponential moving average on the daily chart. So we might take a breather around these levels, 18,300, 400, and that should be the area in case if Nifty have to maintain the positive bias. Means during the consolidation also we see like 2 kinds of bias, whether positive or negative. So as of now, the indications were positive because we were holding above the 20 days of exponential moving average. So for Nifty to maintain that positive bias, it should hold 18,300. In case if it fails to hold the same, then expect this consolidation to extend. Extend in the sense 18,000, 17,900. That could be the mark that Nifty might be heading towards to. So 18,300 is the ultimate test that one should keep a close eye on in the next week. Considering that we have mixed clues from the global markets, and the performance of the index majors are also mixed at the domestic front. On the higher side, earlier we were talking about 19,000. So now, before that, 18,750 would act as a strong resistance. Then, obviously, that new milestone, which is 19,000, is what index could progress. So, more importantly, that initially we expect that Nifty might continue to consolidate in a range 18,300. It should hold to maintain the momentum, and upside 18,750. A break above 750 would help the index to regain the momentum that we have lost of late. Just opposite to this, banking index, it was hovering in a range. Yesterday we witnessed the breakout. So 42,900 to 43,400 was the range that we were trading in. A very narrow range. We have tested the breakout target also close to 43,800 in the initial trade today, and then we saw some profit taking. But again, in the last hour of the trade, wherein we saw that recovery in the market today, banking played a critical role, wherein it almost ended on a flat note. So that clearly shows the outperformance that we are seeing in the banking index. It might continue, especially why we are saying this, that as of now, it was like the private banks were like largely on back foot. So except Axis, I can't recall any other name from the banking space which contributed much to the gains. Yes, selectively SDFC, IndusInd Bank, we saw some bit of contribution, but otherwise it was only the PSUs which were gaining traction. So and today it was like the PSUs were slightly in the back foot and the private banking names were doing well. So we expect that since the private banks have more weightage to the index, the tone would likely to remain positive in the banking index. So if we compare these two indices, we prefer banking index for the long trade instead of Nifty. So let Nifty stabilize and form some reversal pattern around 18,300 levels. And then one can look for positional trades for fresh longs in the Nifty index. But as of now, Bank Nifty looks more promising, wherein 44,250 as per the projection technique is what we are eyeing as a first target, and then 42,800. Downside 42,700 to 41,900 that we have shared last week also, that would continue to act as a major support in case if there are any profit taking in the weeks to come. Now comes the stocks. So in case if we are very vocal about banking doing well and expected to continue this move, why we are saying this is because of this stock, HDFC Bank. So you can see that gradual recovery followed by a consolidation phase and then again a surge. And this time around we are seeing a very narrow range consolidation in HDFC Bank. And the best part about any trade or investment wherein that the risk to reward is favorable means at least the risk is capped. So to test whether this trade is going to work or not, all you need to do is to place a stop loss below 1600. Just in case, I'm giving an example, because this consolidation band is very narrow. So keeping that in mind, so 1635 to 1600 is what it's currently trading in. So just on safety sake, if we put a stop around 1590, also that should work. So around 40 points kind of stop, and again a possibility of SDFC inching towards the record high closer to around 1700 plus levels is very much there. So HDFC Bank should definitely be on your radar in the next week. Next comes the FMCG counter. So basically these are the two packs, both FMCG and banking. We believe that like this week they'll continue to do well in the next week as well. So so Colgate Palmolive, of late we have seen that HUL have done well. We have seen decent recovery in Britannia, Marico also have recovered, but Colgate we have hardly seen any move. So here you can see that it's trading in a very narrow range for almost like several months, and finally we are seeing some traction. The stock getting some traction. So it's definitely a positive sign, and considering that the market is slightly wobbly, wherein we are seeing consolidation. So adding a FMCG name definitely makes more sense to your trading or investment portfolio. So Colgate, we feel that yes, the up move could be gradual because we have hurdle around this 1700 mark and then around 1740. but the downside seems capped. So that is something which is positive, and there's a possibility that at times we use, do see that Colgate Palmolive also witnesses strong traction. So that is something which further adds to the positivity here. So Colgate can be considered in case if you're looking for a long trades in a market like this. Now, on the weaker side, so see, among the sectors, if we talk about one sector which I strongly recommend to avoid, irrespective market starts making a new high, is pharma. So pharma, earlier, during the webinars, we used to share that Sun Pharma, Cipla, Torrent Pharma, these are the three top names in the pharma basket. The rest of the stocks are, witnessing pressure. In yesterday's trade, we saw that Sun Pharma also drifted lower sharply. So Cipla is still, hovering in a range. But majority of the counter from this space is basically, trading on a back foot. So just to give you an example, Biocon is trading in a declining channel. After testing the lower band, we saw some rebound, but it couldn't surpass the major, immediate hurdle around 290, 300 levels, and started drifting lower. So you'll see the similar kind of trend in Dr. Reddy's, Device, wherein despite, oversold position, we are not seeing any sustainable rebound or, buying interest. So that clearly indicates that in case if there will be any further profit taking in the market, the pressure would be more on the pharma space. So Biocon could be one of the names from the pharma basket which look weak to us. Lastly on the list, Dixon Technologies. So again, after spending almost 2-3 months under a consolidation range, and that too above the major averages, long-term averages, it has finally fizzled out. This week, it has not only breezed that consolidation range, but also fizzled out below the long-term averages. So to reclaim both the levels and the moving averages, it's going to be very difficult. So for short term, the bias is likely to remain negative. What could be the probable target? Maybe closer to the previous swing lows, swings high around these area. It might take a breather, but broadly the tone has turned from sideways to negative. So in case if it witnesses any rebound, one can consider going short in Dixon on any rise close to around 4200, 4250 zone. So just to sum it up, Nifty is indicating that this consolidation may continue at least in the beginning of the next week. And to maintain the positive bias, it's important that Nifty should hold 18300 mark. Below that, the consolidation may continue, but the corrective bias may take over. Means you'll start seeing more of the stocks, on the losing side, and more of the index measures on the losing side. So which is not the case as of now. We have 43 stocks, out of 50, which are trading above the long-term averages, which is a positive sign. So that might change in case Nifty fails to hold 18300 levels. So 18,000, 18,100 could be the next area where it might take a breather. Banking, very strong positioning. We expect this positioning to continue. Why? Because the private bank have yet to perform, because except Access, all these private banking names were on the sidelines. HDFC looks promising, IndusInd Bank looks promising. So that may add to the current positivity in the private banking space and the banking sector as well. When it comes to stocks, we talked about big name from the private banking space, HDFC Bank, and Colgate Palmolive from the FMCG space. On the weak side, Biocon and Dixon is something that we expect might continue to trade under pressure. So this is all from the presentation part. Now we'll do a quick poll, and then we'll begin with the Q&A session. So I'm just launching this poll. Please quickly fill your feedback, and then we can start with the Q&A session. if you are done with your feedback, you can start posting your question using that Q&A tab. Rules are same, that no individual stock specific queries, please. Anything related to any sector, definitely we are happy to answer. And anything related to the presentation also, it's completely okay. You can ask. But first, quickly fill that feedback so that we can start with the Q&A session. All right, let's get started now. We have, okay. So we have first question from Mr. Sagar, the outlook on the metal sector. So metal as a sector, Sagar, we have seen decent, surge of late, but not all these stocks are contributing to the move. National Aluminium is one of them. SAIL, National Aluminium, there was hardly any participation. So I feel that, in fact, in the time that we've started doing this webinar, my main, focus area or advice was like always to chase the performers, not the laggards. So why I'm saying this, because as of now, we are seeing that markets are trading at the record highs. We are holding around the record highs. But in case if the stocks are not participating yet, there must be some issues or challenges which are not known to us, maybe known to somebody else in the market. That's why we are not seeing this performance. So only stick with the stocks which are trading in line with the trend or ahead of the trend. So means when we talk about metals, JSW Steel, Jindal Steel, they have again, trading around the record highs. So it's not that they have moved up around 100% from the bottom. So at least the other stocks should also participate and give 10-20%. So that might not be the case. In the laggard, and especially in the market like this, and wherein we are seeing like profit taking coming in every now and then. So stick with the leaders, especially in the metal pack. The tone is still positive. Yes, IT pack, Mr. Pradeep have asked. So that is, I would like to highlight and share also that in last, I guess, couple of webinars, we've discussed about IT pack, that we have seen reversal after 11 months of correction. But the kind of decline that we have seen this week, it has raised a question mark on this reversal. So though, the US markets did well yesterday, but and because of the IT stocks, by the way, but our markets were completely opposite. Our markets were under pressure because of the IT counters. So this kind of like, deviation is something that market should adjust to. So as of now, it's very difficult to say that the reversal that we have seen has fiddled out completely. That's not the case. Yes, we have almost reached to that mark of the breakout area. In fact, we have penetrated that zone also. But at times it do happen that we see a reversal fading out initially and then actual reversal. So it's completely okay. We need to wait for a timing and to see whether this recovery or the rebound is for real. And yes, it's not something that one should become adventurous and start buying IT stocks. So let them stabilize at least for at least 2-3 trading sessions, and let's see how they perform. In case if this correction continues, then definitely it's something that one should avoid. Earlier we were avoiding IT, but after this breakout, we made an attempt that there could be some buying interest. In fact, some of these stocks did exceptionally well from the mid cap IT basket. Stock like Persistent, stock like LTI, they have all done well. But now we are again seeing the similar kind of the reversal in the trend also. So something is what the indications are, that one should wait For fresh buying in the IT, existing position, you should be like, maintaining stop losses if it's a trading position. So no stock specific queries, please. So Mr. BHJJ, sorry, I can't see your name properly. So maybe, we have discussed about four stocks, two on the positive side like SDFC and Colgate Palmolive, which look strong to us for the next week. And both these stocks have the best part about is that they're trading closer to their support. So in case if you make an attempt for a trade, the risk to reward is favorable. So you may consider in case if your risk profile allows. So what is the range for the banking index for the next 2 to 3 months? So this is Mr. Anup Jain have asked. So Mr. Jain, I feel that the banking index was amongst the top gainers within the sectoral pack. So first it was the auto, which made a new record high. Then it was FMCG, and then finally the banking index. We saw that made a new record high. So that clearly shows that this buoyancy can extend further, and maybe close to around 46,500 to 47,000 level could be the area that it might test in next 2 to 3 months. So IT stocks we have already shared, Mr. Venkata. Yes, Mr. Flex, this is what we have shared, that indications are in the favor that the IT pack, might again witness consolidation. So the kind of, buoyancy that we had a couple of weeks ago, that has faded. So it's not that it's completely negative now. We might again see consolidation in the IT pack. Energy sector, Mr. Sheikh, we feel that one needs to be selective in this space because of late, what we were observing is that the OMCs are still doing well. Yes, volatility is there. In fact, very strong swings we have seen in all the OMCs. IOC is comparatively stronger within the pack. Then from the gas distribution name, we are seeing that all these stocks doing well, but Gujarat Gas and IGL, they are the preferred names. And the biggest name from this space, Reliance. Reliance is basically also disappointing the market because after that recent recovery, again we are seeing that Reliance is drifting lower, and maybe level close to around 2550 could be the area that it might take a breather. So it's a kind of a mixed trend within the energy sector, and I feel that the ideal way to trade is to stick with the OMCs. Snehash, we have already discussed about IT. I hope that I've answered your query. Yes, this is important that Mr. Benjamin have asked how much upside is there in the PSU banks, and can we buy them during the correction for the upside target? So yes, IT index, in fact, we've discussed about IT index, PSU banking index in the last webinar also, and I've strongly recommended that yes, the momentum is there, and we can, it's okay to chase momentum as long as you are very disciplined to maintain your stop losses. So today, in case if somebody is not maintaining stop losses, this PSU banking index have shed nearly 2.5% after making a new high. So my idea is that they still look promising, but selectively can bank Bank of Baroda, SBI. Other than that, PNB also we are seeing a bit of traction from the bottom. But I feel that sticking with the top three names makes more sense. And that too with in case if you are very disciplined with your stop losses, then only you should think of it. Otherwise, avoid. Otherwise, prefer private banks. In that case also, one should not take it we need not to maintain stop losses in private banks. That's not the case. Stop losses needs to be there, but at times we don't get chance to put the stop losses. In case if you are not putting a hard stop in the system and you are just maintaining in your mental book that yes, I'll be putting a stop loss once the stock's going to reach here, I'm going to exit the position. So PSUs usually don't give such chances, that a 4-5% kind of a decline is very quick, where in the private bank, the decline is usually gradual, so you get times to exit. Again, whenever you are trading, stop losses are something which is you can't live without. I understand that most of the people are asking about the IT sector, and I've already answered. I hope that suffice the purpose. See, infra space, Prince have asked around it, that how we are seeing the infra space. So infra is like all the different sectors put together, that combines metal, that combines capital goods. So capital goods LT, we have seen that the stock made a new record high this week. Cements also have recovered strongly. ABB, we are seeing consolidation. Metals, again, mostly stocks are doing well, be it Jindal Steel, JSW Steel, Hindalco, Tata Steel, VEDL. Some of the non-performing names also we've shared, like during the interaction, that National Aluminum sale, we are not seeing any participation. So I guess it's again mixed bag that we are seeing within the infra space. And the top performers, obviously my choice in case if I'm trading or investing my money, would definitely be the top names like LT Cements, which are participating with the market move. And from the metal space, obviously JSW Steel, Jindal Steel, the top names. But again, since we are seeing correction in the market, it's very important to maintain stop losses in case if you're looking for a trading position. So Mr. Mahesh have asked about ETF. So though it's not part of that, the webinar or this interaction, but still, ETF is one good way to systematically invest your money into the markets. So we have the index ETF, we have gold ETF, multiple type of ETFs which are available. So if you are associated with us with Religare, you can just check with your relationship manager, and they'll help you out with making investments in ETFs. So no stock specific queries, please. See, FMCG, Kumari Radha, she have asked about the edible oil sector. So in a way, she is referring to the FMCG names. So largely, the FMCG names, we anticipate that the momentum is likely to continue. Marico, which is in this space, plus we have HUL also, which have brands under this space. So all these names are very strongly positioned. So apart from Colgate, HUL definitely should be on your radar in case of the view is at least for a month or two. And then Dabur also, because winters are around, and we usually see the improvement in the demand related to the winter related consumables. So that can also be on your radar from the FMCG basket. The sugar sector, yes, I guess Mr. Benjamin, you have asked about sugar stock sectors multiple times during this webinar. So still my view remains the same, that though there are like news reports favoring a move, but still there's no indication whatsoever on the price front. So of late we had like a phase wherein Balrampur or Renuka or some of these other sugar stocks, they have witnessed buying interest, but that quantum, the pace of rise is not very encouraging. So that's why until we have a very clear trend in place and the momentum is also backing that move, then only one should look for trading position in any particular sectors, including the sugar. So as of now, we are not seeing any clear indication, at least on the that front. Okay. All right, so we have answered, I guess, all the queries which were related to any sector. Stock specific queries we usually avoid because it's not in the favor of the other, members, and the person who are joining us for the reason to understand what the markets are and where we are heading. So, just to conclude, as you know, we've discussed about the market condition. Another important aspect is that the global markets are also indicating mixed at present. So, during the consolidation, as a trader, it's very important that you should hold, hedge your overnight trades. So, hedging your overnight trades, in case if you don't know how to hedge it, you can join our monthly webinars, the rollover report, and you can ask the derivative analyst. In case if you're associated with us, you can call us also to understand and how to hedge our positions, especially if it's the nifty stocks. Then you can hedge it through the index options, and there's multiple ways to look at it. But since we are seeing erratic swings in the global markets, and that result in gap up gap down opening in our markets also, so do maintain hedge position until we resume the trend. This is something which is important. I thought that I should share it with you all. So yeah, with this we can end the call here. Thank you everyone for joining in. We'll meet same time next week. Thank you. Take care.